Welcome and thank you for standing by. At this time, all participants are in a listen-only mode. During today's Q&A session, if you'd like to ask a question, please press star then one. Today's call is also being recorded. If you have any objections, you may disconnect at this time. I would now like to turn today's meeting over to your host, Ms. Pooja Patel. Thank you. You may begin.
Thank you so much. Hello, everyone, and welcome to today's webinar. My name is Pooja Patel, and I am the program manager for the CDFI program and the NACA program within the CDFI Fund. As a reminder, as we just heard, today's webinar will be recorded, and it will be available on our website along with all of our other application materials. Later in this presentation, we will provide a link to where all of these materials live on the CDFI Fund website, so you guys will be able to access those there. Next slide, please. Great. Thank you, DeAndre. And so today we are here, we're going to talk about matching funds. This slide just summarizes a few things that we will not be talking about today and some of the topics we won't be covering today. So we won't be talking about why an organization was unsuccessful in past years. We also won't be going over detailed instructions on how to enter application data into the CDFI Fund's award management system, also known as AMIS. Today, while we will be talking about matching funds in quite a bit of depth, we will try, just in the use of kind of using everyone's time as efficiently as possible. We won't be getting into the weeds and addressing and answering questions about matching funds that are specific to individual organizations or specific to, a specific circumstance. And finally, today we're not going to be talking and answering questions about the revised CDFI certification application or the process for coming into and or applying for CDFI certification via the new application. For those questions, we do ask that you visit the CDFI certification page, and we have additional information on that on our CDFI Fund website as well. With that, I will turn it over to my colleagues, Matthew Pickering and Annie Kraft, to get us started.
Great. Thank you, Pooja, and welcome, everyone. My name is Annie Kraft, and I am an Associate Program Manager on the CDFI and NACA program team. As Pooja mentioned, today's webinar presentation will focus exclusively on matching funds. However, I do want to point out that we did host an FA application webinar in December, which covered many more topics on the application process. You can find a recording of that presentation on our website, and additionally, this presentation recording will also be posted to our website in a couple of days. Next slide, please, DeAndre. I'm going to start by covering matching fund requirements on a high level, and then we will move into some additional detail on many of these topics. So matching funds are required for all CDFI program core applicants at the time of application submission for base financial assistance or base FA, persistent poverty county financial assistance or PPCFA, and Disability Funds Financial Assistance, or DFFA, award requests. At the time of application submission, an applicant must demonstrate that it has in hand and or committed matching funds totaling at least 50% of its award request. And again, that award request is inclusive of base FA, PPCFA, and DFFA. Additionally, matching funds information will be entered directly into the matching funds section of the FA application in AMIS, which is our award management information system. For applicants that are selected to receive an award, recipients must evidence 100% of the award matching funds in hand before a payment is made. The deadline for demonstrating 100% of in-hand matching funds is January 31st, 2025. This means that applicants have more time to secure additional sources of matching funds if necessary. We will walk through these concepts with examples later on in this presentation so that you can see how they play out with some real life scenarios. Next slide, please, DeAndre. In order to be eligible, matching funds must be received within the matching funds window. For the fiscal year 2024 funding round, the matching funds window is from January 1st, 2022 through January 15th, 2025. For the purposes of the application, matching funds received between January 1st, 2022 and the application deadline, which is February 15th, 2024, will be considered in hand, and matching funds received after the application deadline and by the end of the matching funds window, or January 15th, 2025, will be considered committed. Next slide, please. As I stated earlier, matching funds are required for CDFI program core applicants for Base FA, PPCFA, and DFFA. The matching fund requirements for SECA, or Small and Emerging CDFI Assistance, and HFFI, or Healthy Food Financing Initiative, which is a supplemental program, applicants, was waived in the final fiscal year 2023 appropriations. However, fiscal year 2024 appropriations are still pending. Therefore, SECA FA and HFFI FA applicants are not required to submit matching funds at the time of application submission. However, the CDFI fund does reserve the right to request matching funds from these applicants if the requirement is not ultimately waived in fiscal year 2024 appropriations. Matching fund requirements was permanently waived for Native American CDFIs applying through both the CDFI program and the NACA program. This means that Native CDFIs are not required to provide matching funds for their FA awards, regardless of which program they are applying through. And lastly, matching funds are not required for technical assistance or TA applicants for both CDFI and NACA. Next slide, please. There are multiple ways to meet matching fund requirements. Applicants can use one or a combination of the matching fund types you see outlined on this chart. Grants, in-kind contributions, retained earnings, and loans are especially flexible as all applicant types are eligible to use them. There are some limitations on other sources of matching funds. For example, only regulated applicants can use deposits. The type of matching funds submitted by the applicant determines the form of the FA award. For example, if an applicant provides matching funds in the form of a grant and is awarded, the award will be in the form of a grant. Additionally, if the applicant provides an equity investment as matching funds, the FA award, if they are awarded, will be in the form of an equity investment. Next slide, please. Matching funds must be from non-federal sources. I encourage all applicants to refer to Table 9 of the NOFA, as well as our published matching funds guidance for much more detail on eligible and ineligible sources of matching funds. In addition, we have several examples in our guidance document. Also, it is possible to get an FA award in two different forms depending on the matching funds provided. For example, one recipient's FA award could be partially in the form of a grant and partially in the form of a loan. The CDFI fund will use matching fund sources that result in an award in the form of a grant before counting other sources. This means that if an applicant submits a variety of grants and loans combined to meet their requirement, we will first use the grants because they result in the form of award as a grant. Again, we're going to highlight later in this presentation how this looks with some more specific examples. Next slide, please. There are certain eligibility requirements for loans used as matching funds, which you see on the screen. Loans submitted as matching funds must have a term of 3 years or more. Additionally, lines of credit and loan renewals within the matching funds window may be eligible. Again, the terms must be at least 3 years. Applicants that receive an award with loans as matching funds will receive their FA award in the form of a loan and in the amount of the loan submitted as matching funds. Further, these recipients will receive the CDFI Fund's standard loan product. The CDFI Fund will not permit a recipient that receives its award or a portion of its award in the form of a loan to change that form post-award or once awarded. Next slide, please. This slide shows our standard loan product, and as a reminder, this information is also in our NOFA and guidance materials. So again, the amount of the award in the form of a loan will depend on the matching fund submitted. It could either be the entire award or a portion. The loan will have a fixed interest rate at 4.19%, a 13-year term, principal payments due in years 11 through 13, and semi-annual interest-only payments in years 1 through 10. And again, just a quick reminder that all of this information, again, is available in our guidance document. At this point, I'm going to pass it over to my colleague, Matthew, and he is going to recover retained earnings as matching fund source.
Great. Thank you, Annie. My name is Matthew Pickering, and I am also an Associate Program Manager on the CDFI NACA team. So retained earnings are usable as matching funds, and whenever used, retained earnings will be matched in the form of a grant. In order to use retained earnings as matching funds for your award, we've provided a unique calculator for all different types of applicant types, including non-regulated financial institutions, banks, holding companies, and credit unions, that is used to determine the amount of retained earnings that are available to you to use as matching funds. Next slide, please. So the calculator that we have provided on the website for download that needs to be attached to the application adjusts your financial statements or call reports, depending on your organization type, for revenue and expenses derived from federal sources and income that you have previously used as matching funds for prior award rounds. The CDFI Fund reviews every applicant's retained earnings calculator, ensuring that all reported figures contained therein match the corresponding figures in your audited financials or your call reports. I want to take a second to stop there and just emphasize for everybody on the call that, when the CDFI Fund reviews a retained earnings calculator, if there is something in the calculator that doesn't match what's in the call reports or audited financial statements, or something that draws a question for the person reviewing it at the CDFI Fund, they will reach out to you and establish a dialogue and discuss, what you entered in the calculator, look for, additional information from you where required. So we just want to make sure everyone knows that, what you put in the retained earnings calculator should be to the best of your ability and knowledge what you can put in the calculator and have that match and just align as much as possible with what's in your financials, whether they're just audited financials or call reports. The retained earnings calculator can use unaudited financial statements for the most recent fiscal year. And again, on that note, typically that's something that we allow only for unregulated financial institutions. But this year, the timing of our funding round has adjusted just a little bit. So we want to make sure that regulated institutions are able to use enough fiscal year-end retained earnings within the matching funds window. So if you are a regulated institution and you are concerned that you might not have your final call reports for fiscal year 2023 by the time you have submitted your application, you can use internal financials or pre-call report information to input for the fiscal year 2023. The CDFI Fund, when we're reviewing the retained earnings calculators, will pull those 2023 final call reports during the evaluation process, and we will verify the information internally that way. And just to note, any retained earnings that is put into the calculator using unaudited information will be deemed as committed until they're able to be verified with either audited financial statements or call report. Next slide, please. So retained earnings since inception is an option that is available only to regulated institution applicants. And conceptually, what retained earnings since inception is the retained earnings over the entire life of your organization. In order to use retained earnings since inception, again, as a regulated institution, you must increase the combination of your shares and deposits and or loans and leases in an amount that is at least equal to the portion of your award that's being matched by retained earnings since inception. And what that means is, like, for example, if you're an organization that is going to receive a $1 million award and you have $800,000 in combined fiscal year-end retained earnings within the matching funds window, that leaves a balance of $200,000 needing to be matched by retained earnings since inception. So the only amount of the increase that we would be expecting to see is a $200,000 increase in the shares and deposits or loans and leases in order to establish eligibility to use retained earnings since inception. The CDFI fund measures these increases independently. The dates that we look at to measure the increases for retained earnings since inception are listed in the NOFA, and we will download the quarterly call reports in order to establish the increases in shares and deposits or loans and leases. In order to use retained earnings since inception, you still do have to submit the retained earnings calculator, and there are a couple of questions near the bottom of your tab, if you're a regulated institution, where you'll have to fill out some information to demonstrate your eligibility to use that option. And I know Annie is going to go over the retained earnings calculator briefly at the end of the presentation, so you can take a look at where that eligibility section is at that point. Next slide, please. So applicants that are using loans or grants, and that includes in-kind contributions for your matching fund sources, do not need to provide documentation at the time of application submission. If you're using retained earnings, shares or deposits, equity investments, or secondary capital as your matching fund source, you do have to provide documentation at the time of application submission. Of course, the most common of those forms in the second bullet is going to be retained earnings. And as I mentioned before, the documentation needed to support your retained earnings is going to be that retained earnings calculator, which you'll attach to the application, and any audited financial statements or call reports available at the time of submitting your application. Next slide, please. So for loans and grants, even though you're not submitting documentation to us at the time of application, it is important to note that you have to have acceptable documentation for all of those sources on hand in case the CDFI fund requests to see them. So refer to the 2024 CDFI program NOFA and the 2024 Matching Funds Guidance, which has a section that lists acceptable forms of matching fund documentation. Just as a reminder to everybody, we do reserve the right to audit FY 2024 FA recipients matching funds documentation to ensure compliance with applicable program eligibility rules. And at that point, that would be when we would be reaching out to you to request forms of identification for the matching funds that you submitted. Next slide, please. So generally, when you submit an individual source of matching funds in the application, you're going to be asked to provide specific information for every source. Those are listed here under the first bullet. And you're also going to be asked to make certain attestations for every source, those being that the matching fund source is non-federal or that it's lost its federal character, and that you do have appropriate documentation to provide us if requested, as detailed in the CDFI program NOFA, as I just said. And if the source is a loan, you'll also be asked to attest that the term of said loan is 3 years or greater. Next slide. So the first bullet point here is a really important one. the amount of the matching funds that are provided at the time of the application has no impact on your final FA award size. You just need to make sure that you're providing at least the minimum of 50% of your total base FA, PPCFA, and DFFA request amounts. Again, just to repeat, the amount that you provide at the time of application does not factor in to your final FA award size. The matching funds window extends beyond the application deadline, as Annie laid out earlier in the presentation, and also beyond the award announcement estimated date. And that is to give applicants time to secure additional sources of matching funds once they know the amount of their award. In the event that a recipient is unable to demonstrate 100% of in-hand matching funds for the final award amount, only the portion of the award that has not been matched with eligible sources of in-hand matching funds will be forfeited, not the entire award. Next slide, please. So we've got three hypothetical examples here, which we hope is going to be helpful in demonstrating how some of these concepts work in a real situation. So our first example is a hypothetical CDFI, Pennsylvania CDFI. This organization is requesting a total of $3.2 million across base FA, DFFA, and PPCFA. At the time of application, they're submitting a total of $1.7 million, which again is only 53% of their total award request. This does meet the requirements for the application. So that $1.7 million is made up of $1 million of in-hand grants, $200,000 of 2022 fiscal year-end retained earnings, $300,000 of 2023 fiscal year-end retained earnings, and $200,000 of in-hand loans. If that group's final award amount is $1.2 million total, the CDFI fund would use first the $1 million in grants, the $200,000 in fiscal year-end 2022 retained earnings. The rest of those sources would be available for a future funding round as long as they're within the matching funds window. The entire award would be then provided in the form of a grant. Next slide. So example 2 is Idaho CDFI, which is a loan fund, hypothetical loan fund. This group is requesting $2 million, and they've provided exactly 50% of their total request amount in matching funds at the time of application. Those sources are $500,000 in committed grants and $500,000 in-hand loans. So let's say this group gets their entire award request of $2 million. So what would happen in this instance is that we would reach out to the applicant following the award announcement, and we would notify them that $500,000 of their award would be in the form of a loan. And then we would have to request additional information on other matching fund sources, including the $500,000 in committed grants, just to make sure that they're in hand. So the applicant has until January 15th, 2025 to secure additional sources of matching funds, and if necessary, they have until January 31st of 2025 to provide the evidence that all matching funds are in hand. So this hypothetical group then confirms the initial $500,000 grant is now in hand and provides another $800,000 in in-kind contributions. That's a total of $1.8 million. So it's a little shy of the total $2 million award. That leaves $200,000 of that award deobligated. $1.3 million of that award would be a grant, and as initially notified, $500,000 of that would be a loan. And I know these examples are very thick. There's a lot of information and detail here. I also want to emphasize that all three of the examples we're going over today are also listed in a document called the Matching Funds Fact Sheet, which is posted on our website. So next slide, please. And this is the last example that we're going to talk about today. This is Kansas CDFI, which is a bank holding company, so a regulated group. This organization is requesting a total of $2.6 million, and they have $0 in positive fiscal year-end retained earnings, which means they need to rely entirely on retained earnings since inception if they're planning on using retained earnings for matching funds. So what this group would do is enter $2.6 million in their matching fund section in the application and also submit the retained earnings calculator demonstrating their eligibility for retained earnings since inception. When this group gets their final award, it's $2 million. And so what happens is the CDFI fund will reach out, the CDFI fund will calculate the required increases in shares, deposits, and or loans and leases internally based on the date specified in the NOFA. During the qualifying period when we would be measuring those increases, this CDFI would demonstrate $3 million in increases, which qualifies them for $3 million in retained earnings since inception. And as a result, we would use $2 million of retained earnings since inception and issue the entire award in the form of a grant. Next slide, please. I am going to hand this back to Annie to wrap up the presentation today and then open it up for questions.
Great, thanks, Matthew. At this point in the presentation, we are going to do a quick true or false review of the content we've presented so far. Now, unfortunately, we cannot make this interactive as we do not have the chat function enabled, but as I read through these, I will pause so that attendees can think about the answer and do a knowledge check. So number one, true or false? Applicants are required to enter matching funds information directly into AMIS. Again, I'm going to pause and let folks think about that for a moment. So this statement is true. All non-native core FA applicants will enter matching funds information directly into the AMIS application. And adding to that, as a reminder for those folks using retained earnings, the retained earnings calculator will also be attached to the application in AMIS. Number two, true or false? Core FA applicants that do not qualify as a native CDFI must provide evidence that they have at least 50% of their requested award amount in hand or committed matching funds at the time of application submission. Is that true or false? That is also true. At the time of application, the requirement is 50% of the requested award amount. And remember that the requested award amount includes base FA, PPCFA, and DFFA. Number three, true or false? Core FA applicants that do not qualify as native CDFIs must submit documentation such as grant agreements or proof of payment for grant and loan matching fund sources at the time of application submission. Is that true or false? So this one is false. Supporting documentation for matching funds in the form of loans or grants are not required at application submission. However, upon request, this documentation must be made available to the CDFI fund. So last but not least is number four, true or false? Retained earnings must be calculated using the CDFI fund's institution type specific calculator. True or false? This one is also true. Applicants using retained earnings as matching funds must use our institution-specific calculator. This is available, posted on our website, and at the conclusion of this presentation, I'm going to do a quick demo so that everyone can see what that looks like. Next slide, please. So we know that this presentation has a lot of information in it, as well as our guidance having a lot of information. So the purpose of this slide is to highlight a few very important reminders about matching funds. So again, first, I want to reiterate that matching funds are only required for non-native organizations applying as core SA applicants under the CDFI program. Matching fund requirements have been permanently waived for native CDFIs. Second, at the time of application, an applicant is only required to demonstrate in-hand and or committed matching funds totaling 50% of its total request. And then additionally, recipients have through January 31st, 2025 to demonstrate in-hand matching funds totaling 100% of the total award. As Matthew noted earlier, the matching funds window extends beyond our estimated award announcement date. And lastly, I want to reiterate that applicants have multiple ways to meet the matching fund requirements and can use one or a combination of matching fund types. Next slide, please. On this slide, you'll see critical deadlines for the fiscal year 2024 funding round. The first three, creating an AMIS account, EIN, and UEI, entering those into AMIS, and submitting the SF-424, those have already passed, so I am going to focus on our upcoming deadlines. The last day to contact us, the program team, is February 13th. And the last day to contact the AMIS IT Help Desk, submitting the Title VI compliance worksheet and submitting the application itself, is February 15th. And again, this table has the exact times of those deadlines, and this information is available in multiple places, including the NOFA, our guidance materials, and in the application when it's launched in AMIS. Next slide, please. These two deadlines apply to certifiable CDFIs or uncertified SA applicants. The last day to contact our certification team is March 1st, and the last day to submit a CDFI certification application is March 5th. So again, just want to emphasize these quickly approaching deadlines for the 2024 funding round. Next slide, please. On this slide, you'll see contact information for various business units within the CDFI fund. That includes the CDFI NACA program team, where we can assist you with application-related questions. We also have contact information for our compliance monitoring and evaluation support, as well as CDFI certification support. And lastly, for technical issues related to AMIS, we have contact information for the IT Help Desk. The most efficient way to get a hold of us is through submitting a service request, and just, being sure that depending on the topic, you select the most applicable business unit to handle that. Next slide, please. We have a wealth of information and materials on our website. We have a webpage specifically for the CDFI program and a webpage specifically for the NACA program. On these web pages, you will find the NOFA, application guidance, and, related to today's topic, matching funds, we have matching funds guidance and our matching funds fact sheet. This is also where you can find recordings of our webinar presentations, as well as dates and access information for future webinars. We have two left to present. We have a CDFI program Q&A and a NACA program Q&A coming up. So I encourage everyone to review all the materials on our website. At this point, I am going to turn it over to Cedric, our operator, and he is going to explain how questions will work. And then after he explains that, I am going to do a quick demo of our retained earnings calculator. So Cedric, I'm going to turn it over to you momentarily to provide everyone with instructions for questions.
Sure thing. As a quick reminder, if you'd like to ask a question from the phone lines, please press star then 1. Remember to unmute your phone and record your name clearly when prompted. If you'd like to withdraw your question, you may press star 2. Again, to ask a question, please press star followed by 1. One moment as we wait for the first question.
Thanks, Cedric. So at this point, while you're all thinking and preparing your questions, I am going to quickly highlight some features of our retained earnings calculator. So our retained earnings calculator is institution specific. So the tab that you see displayed on the screen here is the first tab, and you will select the specific type of financial institution that applies. So for illustrative purposes today, we are going to select a credit union. So once you select the institution type, another tab will populate. This one's specific to a credit union. Of course, if you had selected a different type, a different tab will appear. So a few key things here. The cells that you see in red represent the fiscal year end. And you want to start with the most recent on the right. So DeAndre is going to select fiscal year 2023 for that one. And then, of course, you can move left, selecting previous years. I do want to reiterate a point that Matthew made. We understand that regulated institutions might not have final call reports for fiscal year 2023 by the application deadline. If you are a regulated applicant in this situation, you can still select fiscal year 2023, and then you would enter the data using internally prepared financials. During our evaluation process, we will pull call reports once they are publicly available. A couple other items to point out here is all of the cells you see in a gray color are either informational or have formulas in them. So those are locked by design. All of the yellow cells are where you will enter data related to the specific line items. Scrolling down to row F, adjusted retained earnings. I want to point this out because it's important because this row represents your retained earnings available by fiscal year. So the number that you would see all the way to the right under 2023 would be your retained earnings, your 2023 retained earnings. Additionally, Matthew mentioned that if you're using retained earnings since inception, there are eligibility tests built into this calculator. So I'm going to have DeAndre scroll down a little bit to right here, exactly. So these right here, where you see the applicants using retained earnings since inception, these are the tests, test 1 and test 2, which are essentially eligibility checks for using retained earnings since inception. So this, again, high-level overview of the retained earnings calculator. If you are using retained earnings as a matching fund source, I highly recommend having the matching funds guidance open while you're completing this calculator, as you'll see much more detailed instructions for the particular cells. Okay, I'm going to have DeAndre, you can stop sharing this. We are going to now break for Q&A. So I'm going to turn it over back to Cedric to lead the questions. A couple quick reminders. Again, we want to focus on matching fund questions for today's webinar. And then also, if it's something incredibly specific to your institution, we do encourage you to submit a service request. And also there's a few of us staff members here that are going to be answering questions, and we may need to converse for a little bit to figure out who's going to take what. So if there's a little bit of a pause, just know that we're working on getting you an answer. So with that, you will stop hearing from me, and I'll turn it over to Cedric to start facilitating the Q&A. Thank you.
Sure. And our first question comes from Everett White. Your line is open.
Hey, good afternoon. You actually answered my question, so I should have withdrawn it. It was about the regulated institutions and being able to use 2023 data. So thank you for that.
Oh, of course. Thanks. Glad we covered it.
Yes.
Thank you. Our next question comes from Julia Helmerich. Your line is open.
So I just wanted to confirm, in the past, our organization, we received grants from the California State Water Board, and we've been able to use those grants as our matching funds. And I just wanted to confirm that that's still okay to do.
Hi, I can take that question. I would say, you know, at this point, we should probably not approve or disapprove individual sources of matching funds over the phone.
Okay.
We could certainly take your request or your question via service request, but I would point you in the general direction of the matching funds guidance just to, you know, there is a list in the matching funds guidance document that kind of outlines the eligibility criteria for matching funds, and there's actually a very helpful list of specific things that would make a source ineligible. So provided your source that you're talking about does not have any of the characteristics listed in what we say is ineligible, I would say you're probably good to go.
Okay. Thank you. I did read it all, but I did not see anything specifically kind of relating to this. And we have used it in the past for successful applications. So I just wanted to be careful and be sure. But thank you.
Yep. You're welcome. Thanks.
Thank you. Our next question comes from Jane Tandler. Your line is open.
Hi. I wanted to see how unregulated institutions calculate retained earnings.
Sure. DeAndre, is it possible for you to reopen the retained earnings calculator briefly?
And then just to add to that, can real estate be used?
I'm sorry, real estate meaning like a specific real estate holding of your organization?
Yeah, correct.
I think maybe we would take that question offline. Remember that, you know, whatever source it is that you're asking for needs to be received by your organization within the matching funds window. But I would suggest submit that one as a service request just so that we can speak to you about that one offline.
Oh, okay, thank you.
Sure. So DeAndre, if you could go back to the Select Institution Type tab, and instead of credit union, just select unregulated CDFI. So this is the tab that you're going to see when, as an unregulated CDFI, you are trying to use retained earnings. Scroll to the top. So you're going to base your inputs in here, and again, as Annie noted, you're going to use the yellow cells. Those are the input cells that you're going to be looking to put things in. Again, most recent fiscal year on column F, depending on your organization's fiscal year end date. So you'll select your most recent fiscal year end. You're going to use your audited financial statement to make the inputs here. So your total income and revenue, any income you've received from federal sources over the fiscal years listed in the calculator. Scroll down just a little bit. And then income listed as matching funds used in prior funding rounds. Your organization's a prior awardee. Scroll down a little bit more. Retained earnings used in previous years, line D1, fiscal year end retained earnings used, again, only applies if you're a prior awardee that has used retained earnings before. And your adjusted operating income and revenue would appear then on line E. And below that, you're going to put your total expenses. Scroll down a little bit. Again, total expenses aligning with what's in your audited financial statements. And then in section, scroll down a little bit more. You are allowed to reduce your expenses by certain eligible categorical expenses here. Again, there's more information on eligible things that you can deduct from your expenses in this section in our matching funds guidance. But just remember, if there's these things should align with what's in your audited financial statements. And if you do wish to clarify anything that you're reducing by, you can enter some notes in documentation in column G. And again, there are no since inception options for unregulated institutions, so you won't see that on your calculator. But you will have the option of using either fiscal year end or a 3-year average, whatever is more favorable for your organization. Is that helpful?
Yes, thank you.
Sure.
Thank you. Our next question comes from Devin Polman. Your line is open.
Hi, thanks for taking this question. So we have 2 questions. The first is in terms of grants that would qualify or types of grants, are there any, for the matching funds requirement, are there any restrictions on those grants? So say, for example, we have a recoverable grant, or if there were other terms of a grant agreement, are there any things we need to be cautious of in that space? So that's question number 1. And our second question relates to other income using retained earnings. So in your matching funds guidance, we're looking at the rules for retained earnings number 5, and the language seems very clear, but we want to ask just in case. It says that you won't consider additional sources of other income to the retained earnings calculation. In our case, we can trace that back to donations with historical documentation of averages. So just curious whether there are any additional flexibilities or provisions there. Thank you.
Sure. I think it might be best if we handle this one as well in a service request, if you wouldn't mind submitting that one, just because it's a little more specific to your organization and a little bit more deep into the weeds. If you wouldn't mind, we would appreciate a service request on that, and we'll try to get you an answer as soon as possible.
Okay, thank you.
Sure. Yep.
Thank you. The next question comes from Vicki Parker. Your line is open.
Okay. Can you hear me?
We can.
Yes, we can.
Oh, good. Okay, thank you. 2 quick questions. One is, are PRIs, could that be considered a grant or is that a loan? And then secondly, does it matter if the grant or the PRI is in the target market or used in the target market?
Give us a quick moment to confer on that one, and we'll do our best. Just give us a couple seconds here. Thank you.
Thank you.
Okay. Next in queue, we do have Christina Elliott. Your line is open.
Yes. My question is in reference to retained earnings for nonprofits. So according to our audited financial statements, part of the total revenue is calculated by using net assets released from restrictions. So my question is when we're calculating total revenue and total expenses, is it as the funds are released or as money is actually coming in and being expended? So in terms of like CDFI, federal sources.
Great, thank you for that question. And we get a lot of questions of this nature, actually. And our general response to these types of things is that the way you report it in the retained earnings calculator just needs to be consistent with the way it's recorded in your audited financial statement, because that's how we're verifying it. When we look at your retained earnings calculator, we're looking at your financial statements or your call reports, depending on what type of organization you are. We don't generally get into like, giving advice or like telling people exactly how they're supposed to record things, but defer rather to your own accounting system and the way things are shown in your own statements. So I know that's not really an answer, but hopefully that's good enough and helpful enough to help you move forward.
Okay, thank you.
And I'm going to take a second, too, because I think that I'm not sure if we can go back to the previous person who asked a question about the PRI and whether it's a loan or a grant. If that person could submit a service request to us as well, we'll get them an answer as soon as possible. Just want to follow back up on that so we don't lose track of it. Any other questions, Cedric?
Still showing no questions in queue. Another quick reminder, if you do have a question, please press star then one. One moment to see if we have any additional questions. Okay, we do have a question that came in. Christine, your line is open.
Thank you. So for grants that are used for matching funds, I have just a couple of questions. Can we use restricted grants for this as opposed to general operating funds?
Christine, give us 1 second, please. Thanks. So again, I know this is a sort of repeat thing. Christine, if you could just submit a service request on that. Again, we get a lot of really, really technical questions on matching funds, and sometimes it takes us a minute to be able to respond to them because there's a myriad of different options and variables of things that could happen. So apologies for not being able to answer that, but if you could submit a service request, we'll get a response for you as soon as possible. Thanks.
Okay. All right. And then, yeah, the other question I had is kind of tied to that. If there are sub-grantees that are a part of the grant, are we allowed to use that grant for this?
So are you saying that you received a portion of the grant?
If our this is just an example, but if one of the grants we want to use includes a sub-granted, if let's say it's $1 million, we have the $1 million grant, but a part of that is sub-granted out. Are we allowed to use that one?
So I think what you'd be looking for is to make sure that, to demonstrate that this particular grant source is in hand and is yours is the documentation listed in the matching funds guidance. So there's a list of things that essentially it needs to be money that's in your possession, in your organization's possession, or was received by your organization within the matching funds window, and has to have been used for one of the eligible activity categories like development services, financial services, et cetera. But, if you're the organization that received it and are in physical possession of it, I would say yes. Does that answer the question for you?
I think so. And my other question, I think I know the answer to this, but does CDFI contact the funders that are listed?
No.
Okay.
No.
All right.
But we do ask for contact information because, let me qualify that. Not as a common practice. We do ask for that information because, as I noted before, we do audit matching funds used, and as part of that, we need to be able to contact the source of the matching funds. So I just want to qualify that, not as a general practice, not to every matching fund source that you submit, but we do require valid contact information in case we are looking to verify a matching fund source. Does that make sense?
Yes, it does. Thank you.
Sure.
Thank you. Next question. I believe the name is Ainsley. Your line is open.
Yeah, hi there. So I just had one quick question, and this has already been touched on, but I just want to confirm I heard everything correctly. Can you guys please reiterate the guidance regarding fiscal year-end data to include in the retained earnings calculator for credit unions that do not have their December 2023 call reports?
Sure. So we definitely acknowledge that it's possible you won't have your final 2023 call reports. You can use the pre-call report sort of internal financial information to fill out the information for 2023 as your most recent year. When we are doing the evaluation of your retained earnings calculator and the review, we will pull the call report for 12/31/2023 to verify the information that you've put into the retained earnings calculator. So for credit unions and other regulated institutions, we will be able to pull your call report because it's publicly available. So you can use internal information and we'll verify during evaluation.
Gotcha. So on that spreadsheet, I'm remembering the visual starting on the far right, selecting 2023, and then using our internal available data in the meantime.
Mm-hmm.
Yep.
Yes.
Okay. Thank you.
Thank you. The next question comes from Carla. Your line is open.
Hi, good afternoon. This is Carla, and my question was in regards to the data that we enter in the retaining earnings calculator. So we do have a consolidated audited financials. We just focus on the applicant financial data, or do we include everyone?
Correct. It would be the applicant entity itself. And so hopefully your audited financial statements that you're submitting as part of your application would have consolidating financials at the end of the application, at the end of the document, so that we could see the specific financials for your organization. So if that's not the case, I believe there's guidance on how to address that as well in the application guidance. So.
Oh, okay. Wonderful. Thank you.
Thanks.
Thank you. Now, next question comes from Chris Miller. Your line is open.
Thank you. My question is for the retained earnings calculator for unregulated CDFIs. On the calculation worksheet, and it's cell D38, which is the retained earnings increase from fiscal year ends within the matching funds window. Would you just put in that cell the sum of the retained earnings calculated in cells D35, E35, and F35?
Okay, so J, what you're referring to is line J. It's the retained earnings increase from fiscal year ends within the matching funds window. So the matching funds window is essentially January 2022 through January 2025. So we're looking at the full 2022, 3, and 4 years, calendar years. So your organizations, let's say you have 2022 and 2023 years that are within the matching funds window. So it would be the 2 most recent years you're showing on your calculator. In that cell that you're talking about, you would enter the sum of the total retained earnings in, that would be row 35, not to get too far into the weeds, the sum of the total retained earnings available within the years that are inside the window. So for you would be the sum of the fiscal year end retained earnings available for 2022 and 2023. And I do want to take a moment to emphasize here, we don't ask you to subtract negative values. So if one of the years within the calculator happens to be negative retained earnings available, you could count that as a 0 and just enter the sum of the positive values. Does that help?
That does. Thank you.
Sure.
Okay, I'm showing over the questions in queue at this time.
Okay, well, Cedric, if we don't have any more questions at this time, I think we can probably wrap it up. I can hand it back to you, Pooja, if you're on, to let you send us off for the webinar.
Great. Yeah. Thank you all for joining us. And again, if anyone has any specific questions that we were unable to answer on today's call, or if any new questions come up, please feel free to submit a service request, and we'll do our best to get back to you as soon as we can and answer all the questions we can as well. Thank you to everyone for joining, and have a great rest of the day.
Speakers, you may stand by for a post-conference. To everyone else, this concludes today's call. You may all disconnect at this time.